180 Accountancy. In the earlier chapters, you have learnt about the basic principles of accounting, that for every debit there will be an equal credit. It implies that if the sum of all debits equals the sum of all credits, it is presumed that the posting to the ledger in terms of debit and credit amounts is accurate. The trial balance is a tool for verifying the correctness of debit and credit amounts. It is an arithmetical check under the double entry system which verifies that both aspects of every transaction have been recorded accurately. This chapter explains the meaning and process of preparation of trial balance and the types of errors and their rectification. 6.1 Meaning of trial balance. A trial balance is a statement showing the balances, or total of debits and credits, of all the accounts in the ledger with a view to verify the arithmetical accuracy of posting into the ledger accounts. Trial balance is an important statement in the accounting process as it shows the final position of all accounts and helps in preparing the final statements. The task of preparing the statements is simplified because the accountant can take the balances of all accounts from the trial balance instead of going through the whole ledger. It may be noted that the trial balance is usually prepared with the balances of accounts. Trial balance and rectification of errors. 6. Learning objectives. After studying this chapter, you will be able to state the meaning of trial balance. Enumerate the objectives of preparing trial balance. Prepare trial balance. Explain the types of errors. State various process of locating errors. Identify the errors which affect the agreement of trial balance and those which do not affect the agreement of trial balance. Rectify the errors without preparing suspense account. And rectify the errors with suspense account. Rationalized 2023-24 Trial Balance and Rectification of Errors. 181. Trial Balance of as on March 31, 2014. Account title LF Debit Credit. Balance. Total. Fig. 6.1. Showing format of a trial balance. It is normally prepared at the end of an accounting year. However, an organization may prepare a trial balance at the end of any chosen period, which may be monthly, quarterly, half-yearly or annually depending upon its requirements. In order to prepare a trial balance, following steps are taken. Ascertain the balances of each account in the ledger. List each account and place its balance in the debit or credit column, as the case may be. If an account has a zero balance, it may be included in the trial balance with zero in the column for its normal balance. Compute the total of debit balances column. Compute the total of the credit balances column. Verify that the sum of the debit balances equal the sum of credit balances. If they do not tally, it indicates that there are some errors. So one must check the correctness of the balances of all accounts. It may be noted that all assets, expenses and receivables accounts shall have debit balances, whereas all liabilities, revenues and payables accounts shall have credit balances. Refer figure 6.2. 6.2 Objectives of preparing the trial balance. The trial balance is prepared to fulfill the following objectives. 1. To ascertain the arithmetical accuracy of the ledger accounts. 2. To help in locating errors. 3. To help in the preparation of the financial statements. Profit and loss account and balance sheet. Rationalized 2023 to 24,182 Accountancy. Account title LF Debit Credit. Balance. Capital, land and buildings, plant and machinery, equipment, furniture and fixtures, cash in hand, cash at bank, debtors, bills receivable, stock of raw materials, stock of finished goods, purchases, carriage inwards, carriage outwards, sales return, purchases return, interest paid, commission, discount received, salaries, long-term loan, bills payable, creditors, advances from customers, drawings. Total XXXXXX. Fig. 6.2. Illustrative trial balance. 6.2.1 To ascertain the arithmetical accuracy of ledger accounts as stated earlier, the purpose of preparing a trial balance is to ascertain whether all debits and credit are properly recorded in the ledger or not and that all accounts have been correctly balanced. As a summary of the ledger, it is a list of the accounts and their balances. When the totals of all the debit balances. Rationalized 2023-24 trial balance and rectification of errors 183. And credit balances in the trial balance are equal, it is assumed that the posting and balancing of accounts is arithmetically correct. However, the tallying of the trial balance is not a conclusive proof of the accuracy of the accounts. It only ensures that all debits and the corresponding credits have been properly recorded in the ledger. 6.2.2 To help in locating errors when a trial balance does not tally, that is, the totals of debit and credit columns are not equal, we know that at least one error has occurred. The error, or errors, may have occurred at one of those stages in the accounting process. 1. Totaling of subsidiary books. 2. Posting of journal entries in the ledger. 3. Calculating account balances. 4. Carrying account balances to the trial balance. And 5. Totaling the trial balance columns. It may be noted that the accounting accuracy is not ensured even if the totals of debit and credit balances are equal because some errors do not affect equality of debits and credits. For example, the bookkeeper may debit a correct amount in the wrong account while making the journal entry or in posting a journal entry to the ledger. This error would cause two accounts to have incorrect balances but the trial balance would tally. Another error is to record an equal debit and credit of an incorrect amount. This error would give the two accounts incorrect balances but would not create unequal debits and credits. As a result, the fact that the trial balance has tallied does not imply that all entries in the books of original record, journal, cash book, etc. have been recorded and posted correctly. However, equal totals do suggest that several types of errors probably have not occurred. 6.2.3 To help in the preparation of the financial statements, trial balance is considered as the connecting link between accounting records and the preparation of financial statements. For preparing a financial statement, one need not refer to the ledger. In fact, the availability of a tallied trial balance is the first step in the preparation of financial statements. All revenue and expense accounts appearing in the trial balance are transferred to the trading and profit and loss account, and all liabilities, capital and assets accounts are transferred to the balance sheet. Preparation of the financial statements is explained in chapters 9 and 10. Rationalized 2023-24-184 Accountancy. 6.3 Preparation of trial balance. Theoretically spreading, a trial balance can be prepared in the following three ways. I. Totals method. E. Balances method. E. Totals cum balances method. 6.3.1 Totals method. Under this method, total of each side in the ledger, debit and credit, is ascertained separately and shown in the trial balance in the respective columns. The total of debit column of trial balance should agree with the total of credit column in the trial balance because the accounts are based on double entry system. However, this method is not widely used in practice, as it does not help in assuming accuracy of balances of various accounts and in preparation of the financial statements. 6.3.2 Balances method. This is the most widely used method in practice. Under this method, trial balance is prepared by showing the balances of all ledger accounts and then totaling up the debit and credit columns of the trial balance to assure their correctness. The account balances are used because the balance summarizes the net effect of all transactions relating to an account and helps in preparing the financial statements. It may be noted that in trial balance, normally in place of balances in individual accounts of the debtors, a figure of sundry debtors is shown, and in place of individual accounts of creditors, a figure of sundry creditors is shown. 6.3.3 Totals cum balances method. This method is a combination of totals method and balances method. Under this method, 4 columns for amount are prepared. 2 columns for writing the debit and credit totals of various accounts and 2 columns for writing the debit and credit balances of these accounts. However, this method is also not used in practice because it is time-consuming and hardly serves any additional or special purpose. Let us now learn how will the trial balance be prepared using each of these methods with the help of the following example. Mr. Rawat's ledger shows the following accounts for his business. Help him in preparing the trial balance using I. Totals method, E. Balances method, E. Totals cum balances method. Rationalized 2023-24 trial balance and rectification of errors 185. Rawat's capital account. Drive CR. Date particulars JF amount. Date particulars JF amount. 2014 DEC. 31 balance C, D 60,000 Jan. 01 balance B, D 40,000. Cash 20,000. 60,000 2015 60,000 Jan. 01 balance B, D 60,000. Rohan's account. Drive CR. Date particulars JF amount. Date particulars JF amount. 2014 Cash 40,000 Jan. 01 balance B, D 10,000 DEC. 31 balance C, D 20,000 Purchases 50,000. 60,000 2015 60,000 Jan. 1 balance B, D 20,000. Machinery account. Drive CR. Date particulars JF amount. Date particulars JF amount. 2014 DEC. 31 balance B, D 20,000 Depreciation 3,000. DEC. 31 balance C, D 17,000 20,000 20,000. 2015 Jan. 01 balance B, D 17,000. Rahul's account. Drive CR. Date particulars JF amount. Date particulars JF amount. 2014 Jan. 01 balance B, D 15,000 Cash 55,000 Sales 60,000 DEC. 31 balance C, D 20,000 2015 75,000 75,000 Jan. 01 balance B, D 20,000. Rationalized 2023 to 24,186 Accountancy. Sales account. Drive CR. Date particulars JF amount. Date particulars JF amount. 2014 Rahul 60,000 Cash 10,000. 70,000. Cash account. Drive CR. Date particulars JF amount. Date particulars JF amount. 2014 Jan. 01 Balang AB, D 15,000 Rohan 40,000 Capital 20,000 Wages 5,000 Rahul 55,000 Purchases 12,000 Sales 10,000 DEC. 31 balance C, D 43,000. 100,000 100,000. 2015 Jan. 01 balance B, D 43,000. Wages account. Drive CR. Date particulars JF amount. Date particulars JF amount. 2014. Cash 5,000. 5,000. Depreciation account. Drive CR. Date particulars JF amount. Date particulars JF amount. 2014 Machinery 3,000. 3,000. Rationalized 2023-24 Trial Balance and Rectification of Errors 187. Purchases account. Drive CR. Date particulars JF amount. Date particulars JF amount. 2014. Rohan 50,000 Cash 12,000. 62,000. The trial balance under the three methods as illustrated below. I. Trial balance as at March 31, 2014, using totals method. Account LF debit credit title total. Rawat 60,000, Rohan 40,000, 60,000, machinery 20,000, 3,000, Rahul 75,000, 55,000, sales 70,000, cash 100,000, 57,000, wages 5,000, depreciation 3,000, purchases 62,000. 305,000, 305,000. E. Trial balance as at March 31, 2014, using balances method. Account title LF debit credit. Balance. Rawat's capital 60,000, Rohan's capital 20,000, machinery 17,000, Rahul 20,000, sales 70,000, cash 43,000, wages 5,000, depreciation 3,000, purchases 62,000. Total 150,000, 150,000. Rationalized 2023 to 24,188 accountancy. E. Trial balance as at March 31, 2014, using totals cum balances method. Account title LF debit credit. Total balance. Rawat's capital 60,000, Rohan 40,000, 60,000, 20,000, machinery 20,000, 3,000, 17,000, Rahul 75,000, 55,000, 20,000, sales 70,000, 70,000, cash 100,000, 57,000, 43,000, wages 5,000, 5,000, depreciation 3,000, 3,000, purchases 62,000, total 305,000, 305,000, 150,000, 150,000. Test your understanding. I. Indicate against each amount whether it is a debit or a credit balance, and prepare a trial balance as at March 31, 2014 based on the following balances. Accounts title amount. Capital 100,000, drawings 16,000, machinery 20,000, sales 200,000, purchases 210,000, sales return 20,000, purchases return 30,000, wages 40,000, goodwill 60,000, interest received 15,000, discount allowed 6,000, bank overdraft 22,000, bank loan 90,000, debtors, Natu 55,000, Rupa 20,000, creditors, Reena 35,000, Ganesh 25,000, cash 54,000, stock on April 1,